The Home Mortgage Law Show is a paid program and is intended as a resource guide for education, information, and entertainment purposes and is not intended to provide specific legal advice. The information that you hear should not be used as a substitute for competent legal advice from a professional attorney. Hiring of an attorney is an important decision which should not be based on advertising or the information that you hear today.
You're listening to the Home Mortgage Law Show. We're with you every Saturday from 2 until 4 on News Talk 610, 100.3 WIOD and 970 WFLA. Attorneys Shay DuPont, Will Morris, and George Fajardo, Director of Loss Mitigation. And we're taking your calls right now. It's toll-free 866-610-NEWS. That's 866-610-6397. AT&T Wireless customer star 610. Enrique, welcome back.
Hey, Enrique.
Hi, how are you?
Good.
Thank you for taking my call again.
Sure.
I was listening earlier to your explanation about the lien and the mortgage, and yes, I totally agree that I hear people here in Miami talk about that, and I think there is a misconception. The reason for my call, and I never call a show, is because I was curious about one thing. I have a friend who has a similar situation. He believes that his mortgage is free and clear because the statute of limitations came up on January 15. In his case, and I think it's hard to believe, but it could happen, apparently the bank has written a letter to the court and copied him, or he has a copy, or he found out, whatever, that they cannot find his file. And therefore, they can't actually prove that he has a loan or that he had a loan. They have nothing to back up the mortgage. So I'm going to hang up and listen to your explanation if you don't mind.
Sure.
Is it possible that a bank can lose a file and then the guy, what happens to him? Because he's absolutely convinced that he doesn't have to ever pay, and I don't think the bank so far has said, we don't have the lien, we don't have anything signed by this guy.
Okay. All right. First, there's a couple of issues.
I will hang up. That was my question.
All right,
Interesting question,
Enrique. Yeah. There's a couple issues going on there. The first issue is that in the beginning when all these foreclosure cases started getting filed in 2008 and 2009, we saw a lot of counts and complaints asking courts to reestablish the mortgage, the note and mortgage. And the reason they did that is because for the very same reason the caller is asking about. They couldn't find the original note and mortgage, and a court of law, you can ask a court of law to reestablish it, to deem whatever copies you have to be the original. Because understand, in order to be able to foreclose on a property, you have to, at some point before the judgment is entered, produce the actual original note and mortgage, the wet signatures we call it.
Okay.
And if you don't have it, then you may have a copy, but you can ask a court of law to reestablish it and determine the copy to be the actual original. And that happens all the time. And simply because they might have added a count in the lawsuit asking about being able to reestablish the note. I'm not quite sure what letter he's referring to. Lawyers don't normally write letters to judges.
No, they
judges
don't.
explaining those type of things.
Right.
They might have filed a pleading saying we need to add a count to reestablish the lost note and mortgage. And invariably, a court is going to allow them to do that.
Now, when you say invariably a court is going to allow them to do that, that's again referring back to the fact that courts are courts of equity.
Absolutely.
And if somebody gives a loan of $300,000 for someone to buy a house,
right,
and there's copies of the mortgage, there's copies of the note.
And everybody says it exists. You bought the house.
Everybody agreed
right.
that the house was bought,
right.
That was recorded in the county.
Right.
And you made payments for
right.
10 years on
right.
this mortgage, that a court isn't going to say, well, if you don't have the original, then I'm going to cancel the note completely, because that's not equitable. That's not fair.
It will never happen. The other issue in the question there, he says that the statute of limitations ran in January. Well, here's another misconception. The statute of limitation only requires that you file the lawsuit within the time period. Let's say the 5 years on the default. Once that lawsuit is filed, the statute stops running. The lawsuits go on into perpetuity.
That's
it doesn't really
a
matter.
really good point, Will, because a lot of people in consultations think, well, I stopped making the mortgage payments in 2008.
Right.
And the bank filed a foreclosure action against me in 2011.
Right, and it's now 2014.
So
I'm
statute of limitations is run. No.
It has not run. The statute, it tolls is the word. It stops running the minute the lawsuit gets filed. And how you determine whether or not there's a violation of the statute of limitations, you look to see when the default happened and when the lawsuit was filed. It doesn't matter how long the lawsuit takes to get resolved.
Right. So important issues, and it might be in a motion for summary judgment on his case.
Right, it might be.
That
right.
The suddenly
you know
opposing counsel
That's exactly
realized.
what it is. There's an affidavit saying here's what, because you have to jump through certain hoops to be able to reestablish a lost document. You have to show that you had it in your possession at one point and you kept it in a normal course and for some reason it disappeared. Certain things you have to say, and you can only say that in an affidavit. So maybe that's what he's referring to.
Right. And it's not that the file went missing. It's that the actual original blue ink signatured note or mortgage can no longer be found. So it's not that the file is missing, because you can reconstruct a file anytime you want to
when they filed a lawsuit,
copies of documents.
When they filed a lawsuit, they attached a copy of the note and mortgage to it.
Right.
Right.
A copy.
A copy, right.
Right. So, unfortunately, I don't think that for Enrique's friend that it's the kind of good news that he's honestly thinking it is. What could be is that they can't move forward with a motion for summary judgment on the pleadings, so they can't win the lawsuit that way. But it doesn't, again, mean that the lien on the property, poof, suddenly disappears and he owns that home free and clear. The lien will stay on the property. It just might be that the lender cannot move forward and actually take possession of the property from him. But guess what? If he ever wants to sell it or refinance it, he's going to have to deal with that lien on the property for the principal balance of the note.
Right, absolutely.
Let's go to the phones. Monique, welcome to the show.
Hi, Monique.
Hi, how are you?
Good.
Hi.
What can we do for you today?
I had something going on with Chase Bank here, and we was transferred. And there was a dismissal in December 12th because they couldn't produce the paperwork. They had no note and nothing. And there was no other procedures filed. And I got a letter before November 1st last year. They have no more interest in the home, so they canceled the house insurance and transferred this loan to another company.
Okay.
So what happened here?
Okay.
Then somebody knocked on the door here on Martin Luther Day, and he was threatening us, and he said, I can give you $3,000 and you move out.
Wow.
Wow.
I don't like that.
Don't do that, though.
And my attorney is also a little weird. I don't know. He's telling us, you better take the $3,000 and because they can take over this house and you have to move out here in 9 months. The sheriff is going to knock on your door. And I'm like, I'm scared like this, you know.
Oh, my goodness.
So, I don't know. It is a BSI financial service. It's not even a bank.
We work with PSI. Yep.
Oh, you work? Okay. What is this all about with this company?
Okay. So let's remember that Chase, when you were dealing with Chase was acting as a mortgage servicing company. It was servicing your note. There's an investor that owns your note, and instead of you dealing with the investor that owns your note, they hire a mortgage servicing company that takes the payments from you, that deals with the escrow, applies late payments, gives you your statements, sets up the website so you can make payments and see where keep track of your mortgage payments. That's a mortgage servicing company. So Chase was acting as a mortgage servicing company on behalf of the investor that owns your note. At some point, the servicing rights were transferred to another company, and that company that is now servicing your note is PSI. It happens all the time. Aquin, Green Tree, Specialized Loan Servicing. These are all companies that do that. We've got to take a break, and when we come back, we'll talk about what your rights are with PSI.
You're listening to the Home Mortgage Law Show, so don't hang up. It's 800-974-2712. That's a toll-free number for your free consultation at the law firm of Morris DuPont. 800-974-2712. Much more the Home Mortgage Law Show and your calls right after this. You're listening to the Home Mortgage Law Show, brought to you by the law offices of Morris DuPont and Regal Tax Advisory Group. Just got a call asking about Regal Tax Advisory, and I'll give you that number. Thanks so much for your call. It's 800-6000-TAX, 800-6000-829.
Oh, yeah, Regal Tax. I'm starting to get all my paperwork together. I'm going to be filing before April 15th.
Well, you're going to be filing before me. I got a shoebox somewhere in the back of the closet.
Nope, I've been working with Regal all this past year. Every quarter, I've met with Lewis, and he has advised me what I need to do because I've been
good that way. I mean, she's conscientious about it.
I am.
Me, I take extensions upon extensions.
Did you know that when you're self-employed, if you don't pay per quarter, you get charged interest?
Yes.
If you just pay it all at the end?
Yes, you do.
Yes, George. I did know that.
We're taking calls here on the Home Mortgage Law Show. It's 866-610-NEWS. That's 866-610-6397. AT&T Wireless customer star 610. And on the phone, we had Monique.
Hi, Monique.
Hi. Yes, I'm still here.
Okay, so we were talking to Monique before the break, and Monique, you had stopped making your mortgage payments what year?
It was in 2009.
And 2009, and a foreclosure action was filed against the property, but then that foreclosure action was dismissed, correct?
Yes, they couldn't proceed. They couldn't prove the paperwork.
Okay, and do you know if it was dismissed with or without prejudice?
Without. I have nothing in my hands, you know.
Okay, so it was dismissed without prejudice, which means that the lender at any time within 5 years from the date that the foreclosure action was dismissed, they have 5 years in which to file another No, I'm wrong, Will? Will's shaking his head at me.
5 years from the default. It goes back to the original default.
Oh, it does?
It does. So if she defaulted in 2009, it's coming up on the deadline for them to refile that lawsuit. Otherwise, they'll be barred.
Oh, okay. That makes more sense.
Right.
Okay. So they could refile the lawsuit before the 5-year statute of limitations would be over.
Right. So once the lawsuit is dismissed, it's like it was never filed.
Okay.
Right?
All right.
So
that makes sense.
Okay.
So you've got that issue going on. Now, the second issue is you said that the reason that the action was dismissed was because they couldn't find the mortgage or the note. Was that right?
Yes. They have nothing.
Okay.
And I never signed anything with them. It was a totally different bank, and
okay,
well,
but the privity of contract issue is not relevant. So whether it's not that you signed anything with them, it's whether or not they are the possessor of the note and the mortgage. So think about it. It's a negotiable instrument, this note. It can transfer to different parties, even if they weren't an original party, they weren't an original signator to the note. As long as they're in possession of it, they can still enforce that note.
Okay, so what is this with this company, BSI Financial, and does they have and file again to proceed foreclosure? How is this going to work?
They would have to refile a foreclosure action. So what part of town are you in?
In Plantation.
You're in Plantation. So may I recommend, we have an office in Plantation. J.C. Castro is at that office. I would encourage you to call the office, take advantage of the free consultation. What we'll do is we'll look online, see if there's any foreclosure action currently filed. Right. If not, we'll look at you. We need to understand what your goals are with the property and see what options we believe you have to proceed going forward. Because I imagine you're still in a default state. You're not making payments. So if you want to keep the property, you're going to have to find a way to maybe get a loan modification, get a reduced payment, get them to waive some principal, and get back in good stead with your mortgage lender again, right?
Yes.
Okay, so that's an option. We also want to understand about that person that came to your door in a very threatening manner, said, we're going to be able to get you out of the property and we'll pay you $3,000 to leave, and your attorney telling you, take the money and run. You only have 9 months left.
Whatever you do, don't do that.
Right. So we want to understand that a little more. What I don't like is when people are represented by counsel and they feel that they're in the dark.
Right.
Yes, this is my point, and I was so confused, with my attorney now all of a sudden had a meeting, and I think he don't want no more, I don't know, he has no more interest, I believe. He got all the money, we paid up in front, and I'm really confused. So.
Right.
Yeah, come see us. Please, do yourself a favor. Come see us.
Let me give you the number. It's 800.
Okay.
974
974.
2712.
This is a long number. Is it 2012?
272712.
Or 2712. That was here. Okay.
I'm going to guess that you're not originally from this country, ma'am.
No, I'm from Berlin, from Germany.
From Berlin. Very nice. Very nice. Love to hear a German accent. All right, ma'am. Well, we look forward to your call, and we look forward to trying at least illuminating you so that you understand what your options are and you can make an informed decision going forward as to what direction.
Okay.
All right. Thanks for listening. Thanks for the call.
I like your show.
Thank you.
Oh,
Thank you.
You're very sweet. We appreciate that.
It's a great show. We disseminate money and illuminate people. That's great. I love it.
Thank you so much. Thank you.
Thank you.
Thanks. Bye-bye.
And, it really, it really bothers me when someone is represented by counsel, whether it's a bankruptcy attorney or a foreclosure defense attorney.
And they say they're confused. They don't know. And the information that she's telling us, it doesn't sit well with me. I don't like it. I don't like the sound of it at all.
I wish someone who's a client of ours would call into the show and let these people know how they're treated at the law firm of Morris DuPont. They've got my cell phone number. I call them at night. I call them back on the weekends. When they call, they get a call back within normally the same day, except if I'm over in the Tampa and St. Pete office. Sometimes I have to wait until the following day because I'm just so overwhelmed sometimes when I'm over there that I have to wait until the following day to call people back. And thankfully they're understanding unless there's something going on.
That's the pet peeve I have. The most complaints we hear about lawyers is people not being able to get a hold of them.
Right.
And we try our best to call people back and call them even before they call us.
Yeah. I don't want to miss out on reporting on one story was in, come on, you know the story about the loan modification guys.
Right.
Okay, we've talked and we tried to warn our listeners before about these loan modification scammers out there. They're few and far between these days. We were reporting much more on this in 2009, 2010. We even had a officer from the Florida task force, the mortgage foreclosure task force, on to help people understand the signs that maybe these loan modification companies that you're considering hiring are scammers. But in Los Angeles, there was a company back. It was a couple years ago, and they scammed these people out of $12,500. And the people realized, and the house actually went into foreclosure. And
they were supposed to do a modification.
They were supposed to do a modification. They paid them so way crazy amounts of money to do a modification.
That's a lot of money.
Oh, that's crazy. Didn't you figure? But who knows? Look, I'm not that slick. I don't, all this time and effort to scam people when you could have just done the right thing by them. Yeah.
Charge them $100,000. Just do the work.
Yeah. Well, I don't know about that.
Charge whatever you want to, but just do the work.
Right. So they didn't. They scammed them, and the people actually were set up, and they said, well, we want to meet with you again, and they kidnapped the two loan modification people.
I would say that they took the law into their own hands, but what they did just goes beyond any type of
We are not
retribution.
Endorsing this behavior.
We may understand why you'd be so frustrated to do it, but we're not endorsing it.
We are not endorsing this behavior.
They were charged with kidnapping and torture. And
oh, yeah, they went to prison, but they went to prison with a smile on their face.
They got their $12,000 back.
It was claimed that they actually hit these people on the head with a gun. They tied them up.
Knocked them out, wake them up, knock them out again.
Whipped them with an extension cord.
Holding a kitchen knife to the family jewels. I mean, it was not good. It was not good. But, in my dreams sometimes, I've thought about it, but I would never act on it, and neither should you.
Right.
But, it was an interesting story, and I thought that you would probably appreciate us sharing it with you, that every once in a while, it was like, remember we used to report on that guy that they were trying to foreclose on his home, and he built the home himself in Ohio?
Right, and he put a bulldozer to it?
He did. He put a bulldozer to the house.
He leveled it. To the house.
I loved that story. So that was a guy in Ohio.
You're listening to the Home Mortgage Law Show, 1-800-974-2712, 1-800-974-2712. Toll-free number for a free consultation, 1-800-974-2712. Much more of the Home Mortgage Law Show after this. You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont. Attorneys Shea DuPont, Will Morris, and George Fajardo, Director of Loss Mitigation, taking your calls right now. Toll free to call the show, 866-610-6397, 866-610-6397. AT&T Wireless customers, star 610. On the phone, we have Carlos.
Hi, Carlos.
Hi, good afternoon.
Good afternoon. What can we do for you today?
Okay, I just got a question.
Okay.
I just was listening at your show, and a lady called about a foreclosure being canceled, and you say something about with or without
Prejudice.
Right.
With or without prejudice. Muy importante.
Okay, my question is this. My foreclosure was filed in '07, okay, and was dismissed and canceled in April 2013.
Canceled.
Mm-hmm.
When you say canceled, what do you mean by canceled?
Well, let me see if I read motion. Motion to cancel foreclosure, vacate, summary final judgment, dismiss suit, and declare to return original documents.
Beautiful.
Beautiful.
Love it.
Okay.
So, in what position am I now?
Well, if the case was filed in '07, that means you could have defaulted as early as probably '06. So let's assume you defaulted in '07. You stopped paying your mortgage in '07. It is now 2014. That's 7 years. It seems to me that if they file a foreclosure lawsuit against you, you can get it dismissed because it violates the statute of limitations.
Mm-hmm.
In other words, it doesn't look to me that they can legally file a foreclosure lawsuit against you again.
Carlos, this could be super, super good news for you. This could mean that you could then stay in the property without making a mortgage payment. Now, you'd still have a lien on the property.
Uh-huh.
But they will not be able to foreclose on the property if what you're telling us is correct.
Well, I got the papers here in front of me.
I understand
Well, then
that,
it seems like it'd be pretty correct to me.
Right. You didn't at any point after the dismissal enter any sort of agreement with them and started paying them again or anything like that, did you?
No,
Okay.
no.
All right.
Not a single penny. Because I hear that if you make a payment, they can restart the whole thing again, right?
Something like that.
Hey,
Yeah, pretty
Carlos has
Carlos.
got it going on.
So then theoretically, unless Carlos tries to sell or refinance, he really doesn't have to worry much about that lien,
Not
which would
much.
still
He
remain.
doesn't
You don't
have to worry about it
period.
at all.
He still has to pay his taxes and whatnot because the person can get a tax deed on the property.
Yep.
But other than that, he doesn't have to worry about a mortgage payment.
Congratulations,
Well,
Carlos.
My question is on the taxes. I tried to pay the taxes, and they told me that the taxes were already paid.
Hey,
It
it keeps getting better, Carlos. It just keeps on getting better for you, isn't it?
What happens is when you default, and if you defaulted and your mortgage payment included the escrowing of taxes and insurance, your lender is already set up to continue to pay the taxes and the insurance on the property. So it doesn't surprise me that the lender's escrow department continue to pay the taxes every year because they want to protect their seniority interest in the property. So they may continue to pay the taxes, they may not. You're going to have to check that every single
You
year.
have to keep on top of that.
For insurance, now are you paying the insurance separately, or has the lender been paying the insurance?
No, the lender is paying for the
Oh,
insurance.
for Christ's sakes. Carlos is getting all kinds of...
Okay, so you want it, Carlos. You might want to also get renter's insurance so that the contents of the property is insured, because when a lender force places insurance on the property, they insure the structure. They will not insure the contents of the property. So you might want to include another layer of insurance, and that would be for the contents, which would be something like renter's insurance.
Okay, that's great. Now, a small question again. Someone told me about to try to do a quiet title on the property.
Of course they
Of course they did. Of course they did. And you might have missed the first segment or the first hour of the show where we talked about that. We don't necessarily think that a quiet title action is going to get you the bang you're looking for. It's not going to get you that property free of the actual lien on the property, which is represented by the mortgage. We don't think that's going to happen.
I'll tell you what, Carlos. If someone offers to do that and you can get them to agree to only be paid a flat fee upon the success of that lawsuit and that you get the property free and clear, you get title, the mortgage lien is lifted from the property. If they will agree to those terms of a retainer agreement, then do it. But if they want money up front, and you have to lay out any money for them to attempt a quiet title action, run in the other direction. That's my advice, so that I'm not trying to dissuade anybody from doing it.
Not bad.
But if they think they are going to be successful, let them put their
money
money where their mouth
is.
is.
Exactly.
Yeah.
Exactly.
Now, do you do that kind of a quiet title thing?
I had somebody in the office last week, and they were trying to convince me to do it, and I said, listen, I don't think it's going to work that way, but if you're willing to pay me to give it a shot, I will do it. I'm telling you, I don't think it's going to work, but if you want to pay for it, I'll do it.
Yeah. So we're
because the lien will stay on the property, right?
Absolutely.
It's hard to get a judge to rule that just because a lender cannot move forward with a foreclosure action, that should result in the mortgage
forfeiture
lien
of their lien.
Yeah, that it should be lifted from the property. So one does not automatically mean the other should occur, because it's not fair, it's not equitable. You borrowed the money. The lender should be able to keep the mortgage on the property.
Let me add something else, Shay, that I should have brought up before. I know title insurance companies refuse to issue title insurance on properties that have been acquired by a quiet title.
A really important fact.
Yeah, because then it doesn't do you any good. Even if they say you have the title and you can't get title insurance, then you can't sell.
Mm-hmm. Yeah, and you couldn't sell. You wouldn't have sold with the lien on it anyway.
Right.
So you're just as fine being there and staying there as long as you possibly can. It's a house you're going to want to pass on to your other family members and never try to sell.
Or like you suggested, rent the thing and go buy another house elsewhere.
There you go. Yeah, because it's pure income. So you're sitting pretty, Carlos. You're sitting pretty. Happy to hear from you.
Okay, thank you very much.
Congratulations.
Okay.
All right.
Bye-bye.
And some people might think, wow, that's not fair. You guys are encouraging people to do certain things. No, we didn't encourage Carlos.
That's what the law is.
That's, look.
That's what the law is.
These banks, I consider them to be, criminal enterprises. If anybody can, put one over on a criminal enterprise, I don't consider that to be unfair.
And the thing about it, they have the money, the resources to buy their way out of trouble. Nobody goes to jail. You pay a couple $100 million and everything's fine.
That's right. Yeah.
All right, let's go to Emilio.
Hi, Emilio.
Hey, hi, how you doing?
Good. What can we do for you today?
Well, I got a question. I have a house that I modified my first mortgage. It was at Freddie Mac, and I modified it. And the second mortgage, they just offered me a modification, which to me is ridiculous. They want to keep the same interest rate that I had, was 6.99, and they want to make 300 payments, 25 years. And they want to increase the payment by $100, which is more than what I was paying, by $100 more than I was paying before. The house is upside down. The property value is maybe $140 to $160. First mortgage is $159, and the second mortgage instead is $85. It's Fannie Mae, and they told me that was the only offer they were going to give me.
What?
And I'm wondering, what do you think they may do?
Wait a minute. Who's got the second mortgage?
The second mortgage is Fannie Mae. They're both being managed by City Mortgage.
I find it, George. Can you imagine that the second is held by Fannie Mae?
That sounds remotely familiar to me. I just recently came across one of those. The only other one case where the second mortgage was held by Fannie Mae, and we're in the middle of negotiating with them the way we normally would. We're offering a lump sum settlement at 7 cents on the dollar to start. And right now they're telling us that they do not negotiate short
That's
settlements
exactly what they
on
told me.
second mortgages held by Fannie Mae. That would be our first approach. So,
that's what I did originally. That's what I offered. I said, and they told me they didn't negotiate on any longer.
Hold on. We ought to take a break. We're going to come back, and we'll talk about it during the break.
You're listening to the Home Mortgage Law Show, brought to you by the law firm of Morris DuPont. Pick up the phone right now and book your free consultation. 800-974-2712. 800-974-2712. Toll-free call for a free consultation at Morris DuPont, PA. 800-974-2712. Much more of the show coming up right after this. You're listening to the Home Mortgage Law Show, brought to you by Morris DuPont, PA and Regal Tax Advisory Group. And we're in the home stretch, so we're taking our final calls here on the show. It's 866-610-NEWS, 866-610-6397. AT&T Wireless customers, star 610. And on the phone, before we went to break, Emilio.
Emilio is on the phone with us, and he was lucky enough to get a loan modification on his first mortgage, and now he's been offered a loan modification on what I understand, Emilio, is a completely unsecured second mortgage, meaning the value of the property is at or below the principal balance of the first mortgage. So the second mortgage holder has no equity in the property, correct?
Correct. That's correct.
And it's very unusual. Go ahead.
I also went Chapter 13 in 2010, and both loans were in the Chapter 13. And it's already been discharged.
Well, in a Chapter 13, when it's a primary residence...
Right. It has to be part of the plan.
Maybe it was.
Yeah. But it's a repayment plan.
If it's completely unsecured, why wasn't it stripped? Because
the second could have been stripped, sure.
I chose to continue paying the mortgage.
Even the second, huh? Okay.
What's that?
Even the second mortgage. That's interesting.
Yeah, but what happened was we had a lot of medical bills, and I tried to refinance. It wouldn't do it because at the time there was no programs available, and so I stopped making the payments on the second.
Right. So if Michelle was here, she'd be pulling her hair out because she was talking about
a missed opportunity.
Yeah, it really is.
Look, shoulda, woulda, coulda, but let's move forward. So going forward, Emilio has a very interesting situation. It's actually very rare in that Freddie Mac is the holder of the second mortgage. That is a very rare situation.
No,
Fannie Mae. Freddie Mac is the first, right, Emilio?
Freddie, Fannie, same thing.
Yeah.
Okay.
Freddie Mac is the first, Fannie Mae is the second.
Now, you mentioned that you were approved for a loan modification on the first mortgage through Freddie Mac, correct?
Right. On the new law, which in July went on effect, that there was there wasn't a need for financials, and they just approved
streamlined.
An in-house streamlined modification, which means that it wasn't a HAMP, unfortunately.
Right. I didn't qualify for the HAMP.
Okay. Yeah, the reason that's important because had you qualified for the HAMP, then the two would have been subject to modification under the 2MP program, but unfortunately that's not really an option at this point. So
right, it's not. But what can they do? I mean, what are they going to get out of it? If they foreclose, what are they going to get?
That's a good point, nothing. Emilio. That you rarely see a second lien holder, whether it's a home equity line of credit or a mortgage, that is completely unsecured. You rarely see them file a foreclosure action against the property. Why? Because think about it. Walk that through. If the second lien holder was to file a foreclosure action and force a foreclosure sale, the property sells, the first lien holder would get all of the money. The second lien holder would get nothing. What was the point? So the second lien holder won't normally do that. But Emilio, could they then possibly file an action against you individually on the note? So you have exposure there because they will bypass the property, bypass the mortgage, and just sue you for breach of contract on the note.
But that went on Chapter 13. That was listed under the Chapter 13.
But you said you reaffirmed the first and second mortgage.
No, I didn't reaffirm them. I just continue making payments.
Okay, then they shouldn't even be coming after you because, again, you've been released of personal liability. If that's the case on the second and they're completely unsecured, I certainly wouldn't take the offer that they made you. It's a very bad offer, and I would continue to remain in a default status because they can't come after you for personal liability, and there's nothing there in the property for them to get. It doesn't make economic
sense to come after you on the foreclosure.
Right.
Yeah.
Right. So what I was planning on doing was continue to pay my first mortgage under the modification and just wait and see what they're going to do.
That's what I would do.
It seems to me like this would be a good case to have Michelle review the bankruptcy documents, because if it wasn't reaffirmed, then I'm having a difficult time understanding why wasn't it stripped. So
because I'm probably forgetting some bankruptcy rule that it has to be an investment property or
probably one of those.
Michelle, Ziona, call in and let us know. So, Amelia, you're in good stead. I agree with your strategy going forward. We're going to ask Michelle or Ziona to call in, or we'll give you an answer next week regarding the status of the second mortgage when it's completely unsecured in a Chapter 13.
You could always call the office.
Yeah, you can call the office, and Michelle will answer the question for him. So you can call us at 800-974, 2712, and you can speak to Michelle Hanash, bankruptcy counsel. She's at the law firm of Morris DuPont. She very often is on the show with us, but she's off this week, so you can call her and she can answer the question for you. I just want to make sure that it's a completely unsecured second, so go check the value of the property, what it was at the time that you filed the Chapter 13.
Right. At the time, second mortgage, there was enough equity that I could take it. That's why they gave me the loan. But obviously, when everything went down south, that's what happened.
Sure.
Well, that's the only thing I'd want to check. We're going to go to another call. Appreciate you calling, Amelia. Thanks for listening to the show.
Bob, welcome to the show.
Hi, Bob.
Hi. How you doing?
Good. We've got a couple minutes left. What can we do for you today?
Well, I'll try to lay this out as quick as I can. I bought a home when I was single. I later got married. My wife was never put on the house paperwork for the mortgage or anything. She got some credit cards in her name only. I am not on her credit cards. She became disabled and couldn't pay the credit cards. If I sell the house, can the proceeds be, can the credit card company go after the proceeds of my house?
If you do not commingle the proceeds of the sale of the house and turn them into a marital asset, then the answer is definitely not.
Right.
If you turn the proceeds of the house into a marital asset, still the credit card companies should not be able to go against them because, as you stated, the credit cards are in your wife's name only. But it's harder to prove that once it's commingled. So should you sell the house, I would want the proceeds of the house to not be in a joint account with your wife.
Okay.
That's the only thing. Because if they lean on any of her bank accounts and you're also on them, then you have to argue that they should give you the money back.
Right.
I'd rather they didn't lean and get any of your money in the first place.
And they couldn't lean an account that's not in anybody's name other than your wife's.
Right.
Okay.
Exactly.
I do have a separate account. Now, just one more part to that question.
Sure.
I'm up in age, and if I die and my wife inherits the house in her name, can those credit card companies then go after the proceeds of the house if she decides to sell it after I die?
Good. It seems that way to me.
Yes.
They could.
Yes. If you keep it in a trust, that will protect it. But let me suggest this. Let's settle your wife's credit card debt or put your wife through bankruptcy and wipe out all this credit card debt.
Okay.
Let's just put her through a Chapter 7 and get all this credit card debt released. That's no way to live.
And free yourself of all these problems.
She can do that without me? I don't
Absolutely.
Yep.
Oh, okay.
Yeah, it's her debt. Just have her debt wiped out. Absolutely.
Gotcha. Oh, that's great advice. Well, thank you so much.
Give the law firm a call. You can make an appointment with Michelle Hanash for bankruptcy counsel, and that number is 800-974-2712. We've got bankruptcy, credit restoration, debt settlement, foreclosure defense, loan modifications, short sales, deed in lieu, settling of second mortgages. We're actually seeing a lot of second mortgages being totally wiped out, forgiven by the lender. If not, we're settling them for about 10 cents on the dollar, anywhere from 7 to 15 cents on the dollar is an average amount. Credit card debt, we're normally settling out at about 35 cents on the dollar. Some credit cards, the Home Depot cards, and some American Express is going for as high as 50 cents on the dollar, but we just got an American Express done at 10 cents on the dollar. So you never know.
Right.
You won't know unless you make the phone call. So thank you. Thank you so much for listening to the show. We appreciate it. Remember, offices available, St. Petersburg, Tampa, Dadeland, Doral, Aventura, Fort Lauderdale, Boca Raton, West Palm Beach, Miami Beach, Coconut Grove. If you can hear our voice, there is an office nearby, and we'd love to meet with you. Remember, the consultations are free. I'm Shay DuPont. I'm here with my partner, Will Morris, and George Fajardo, the Director of Loss Mitigation for the law firm of Morris DuPont. And we are happy to meet with you every Saturday from 2 to 4 live here on this station, the Home Mortgage Law Show.
And once again, 800-974-2712. 1-800-974-2712. Attorneys Will Morris, Shay DuPont, George Fajardo, Director of Loss Mitigation, and the entire staff at Morris DuPont and Regal Tax Advisory Group. 1-800-974-2712. We'll see you next Saturday here on the Home Mortgage Law Show.